But the Dow and the major averages are in the last few days of a down month. One big reason, fears of rising interest rates. Traders now pricing in nearly a 20% chance the Fed will hike rates again in September, and concerns the Fed could keep them higher for longer. Well, even though the 10-year yield is near 16-year highs, our next guest says rates are not too high. He says rallies can and have happened along with higher interest rates. Let's bring in Peter Andersen, Chief Investment Officer of Andersen Capital Management, ranked among the top performing managers of U.S. growth equity for the second quarter of this year, returning, I'm looking now, 46%. So that's notable, Peter. It sounds to me when I'm reading through your thesis on a lot of this that you must be watching CNBC's coverage and reading through the financial press a lot and just yelling back at the talking heads.
Well, thanks for the candor. I have always marched to a different drum, the beat of a different drum, and this past year has been no different. I am on record for saying there was not going to be a recession, and I still am in that camp. Also, rising interest rates, I have been pounding the table for that. I know all the theoretical textbooks tell you about the simple dividend discount model. As rates rise, stock prices decline, but it's an oversimplification. So it's a more complex problem to look at. And this time I was lucky and happened to call it in the right direction for the past several years, actually.
I mean, you say luck. Other people in your shoes would be very quick to claim credit. If you're a voice crying in the wilderness, then how do you see positioning your investments for the second half of this year, Peter?
Well, to continue crying in that wilderness, I'm singing the same song, actually. I haven't made many changes to the portfolio. Some of the disappointments, it's just incredible, I would say, this past month. With NVIDIA, I was heartbroken that after it reported such strong, insanely good results, I went to bed that night thinking the next day was going to be one of the happiest days of my career in terms of investing, because I have a large position in NVIDIA. And as we all know, it just kind of flopped. And the market is filled with illogical reactions like that. Even Palo Alto, remember that 2 weeks ago? These things have been driving people crazy. And I think it's just emblematic of how frightened we are about the interest rate hikes and where poor Powell is and how he's trying to navigate that and saying a lot of words but not saying too much. So this is all something that you have to take in stride. And going through the rest of this year, I don't presently think I'm going to make any changes in the portfolio.
Did you just add super micro comp?
I had recently added that, yes, over the past 2 quarters. And, that has been it's also very related to NVIDIA. A lot of investors are not realizing that, and it has been off the radar screen. But as NVIDIA goes, so does super microcomputer. So that's been a bit of a disappointment, too, for this past month. But I have conviction that, AI, here's the other thing. So what people said was when NVIDIA didn't pop the next day, they were quick to make the conclusion that AI is over. It just was a flash in the pan, and I couldn't disagree more. I mean, AI is just beginning, and it's our urge to have these immediate ramifications of news reflected in stock. And I think you just have to take a breather sometime and say, look, we don't get it right all the time, but over the long term, I think we should be optimistic.
A lot of people, I take your point that some people were saying AI is over. There's another group who are saying that maybe NVIDIA has had its best, most sprightly days. Remember that on the prior 2 earnings announcements, it gapped up something like 25, 28% each time. This time that did not happen. What does that tell you from a technical standpoint? I know that's not necessarily your discipline, but what does that tell you about the stock's performance going forward? Can you expect it to do what it's been doing, or is this a time where it's going to be a little more flattish?
I tend to think that we are in the first inning of artificial intelligence. We might not have it right, Tyler, in terms of the actual eventual solution to discovering how human thought can be replicated by machine. But until we solve that problem, the only game in town is throwing more computational power at this. And I think we're just beginning to see, even with NVIDIA's incredible numbers now, I think there will be actually more incredible as we go forward, because there is no other solution. And more companies are realizing that at every level, they can improve their operations. Now, certainly with manufacturing, it goes a little bit more subtle in terms of how AI can work. But in terms of service, I think we're just at the beginning. So I would expect continued strong numbers with NVIDIA.
So
as we
you
go
run, as I
next year.
recall, a pretty concentrated portfolio, maybe 20-some stocks. Am I remembering correctly?
Whoa, that's way too much for me. Actually, about 14 or 15 stocks.
14 or 15 stocks. So what percentage of your total portfolio is represented by NVIDIA now? And at what point would you say that's too much?
Yes. Actually, I let these stocks run unless there's new factual information. I usually start with a 5% position and then let the stock run. So believe it or not, NVIDIA became 20% of the portfolio. And even somebody as highly convicted as myself in that name realized that that's just way too much risk on one name. So I reduced it to about 10%. But that's unusual for me to reduce just because of weight risk. Normally I reduce, I just sell. I either hold the position or sell. But with that situation, it was so unusual that I do feel like I had to be a little bit more cautious. That's a really
interesting insight, Peter, of how you think and how you work, and that you're willing to let those stocks run. And in this case, you're so convicted, or bad term, convinced that we don't want to talk. I say convicted in associated with Peter Andersen. So convinced in the stock's long-term prospects that you would stick with it.
That's correct. Yes, absolutely. And I do have a physics background, a background that I never thought actually would be utilized in investing. But here we are now talking about artificial intelligence and mathematical modeling of drug discovery with a company like Schrodinger's, which is another holding in the portfolio. So all these things that I had thought I would forget are actually coming back to annoy me in a way, but it's actually favorable now in this environment.
All right, Peter. Yeah, you never know where your training is going to come in helpful. Peter Andersen, as always, good to see you. Thank you.